For the first afternoon session, we have honored guests who would now to deliver us the keynote session on the topic Future State of Investment Profession. Ladies and gentlemen, please join me to welcome Mr. Nick Pollard, Managing Director of Asia Pacific Region for Cfa Institute. Give him a big applause, please. Thank you, Mr. Pollard. I give you the stage.
Kunrapi, ladies and gentlemen, thank you very much for having me here this afternoon. The acid test of any good conference is how many people are still here in the afternoon. I think we're doing pretty well, but I can see a few stragglers coming in. But I hope I can entertain you and maybe inform you for the next 20 minutes or so. For those of you who don't know CFA Institute, we like to think ourselves as the professional body of the investment profession, and our mission is to lead the investment profession globally by promoting the highest standards of ethics, education, and professional excellence for the ultimate benefit of society. And as part of that mission, we have a number of different ways that we interact both with the industry and society at large, and one of those is around thought leadership. And so for the next 20 minutes, I thought I'd share with you the findings of some thought leadership we did through our Future of Finance committee that was published earlier this year, but will draw out, I think, many of the issues that have been raised this morning, and also, hopefully, that will carry on having some sort of traction during the rest of the conference. There are 2 million people employed in the investment management industry worldwide, managing over $100 trillion of wealth. So I think that makes it quite an important thing to focus on. And I think the ideas of where we're going with our industry and what we as industry leaders should be thinking about becomes more and more important every day. So this piece of work was designed to do just that, to ask over 1,000 CEOs, CIOs, and boards of investment management industries worldwide, what is it that keeps them awake at night? Where do they think we're going as an industry? And what should we all be considering when we start to make our strategies for the next 5 to 10 years? These are not predictions. You heard from Andrew already that we don't make predictions, but they are things that we think people should be thinking about when they're starting to make their own operating and strategic plans for the future. First of all, we asked a number of questions around what is it that's disrupting your businesses at the moment? And came out with a number of pieces of feedback, which I'll share with you now. So first of all, 84% believe that consolidation in the industry is going to accelerate over the next 5 to 10 years. It's already happening. 70% of investors think that they will be increased allocations to passive strategies. It's happening already. 52% expect substantial or moderate contraction of profit margins. It's happening already. So, as I said, when we did this, we were at the cusp of thinking, and now we're in the middle of it, and we're already seeing many of these things playing themselves out in the market. And then finally, 57% of expect institutional investors will reduce costs by moving in-house. Andrew mentioned this earlier today. It is happening already. So these weren't predictions of the future, but on a scale of 1 to 4, they all seem to be happening, and we got those quite right. That said, business circumstances are changing. 73% of investment leaders expect ESG, environmental, social, and governance factors will become more influential. That's particularly so in Europe, but Asia is catching up very quickly, and I'm fortunate enough to spend time in Japan and China in my role, and the thinking there in the ESG space is moving on extremely quickly. 70% of investment leaders expect financial centers in Asia will become more influential. Good for us. However, the shocking statistic on this page, is only 11% of investment leaders believe that the investment industry's impact on society is very positive. We carry out a trust survey every 2 years around 12 major financial centers around the world. I live in Hong Kong, I'm ashamed to say Hong Kong comes at the bottom of that list. In a question that we asked retail investors, how many of you believe your advisor, your financial advisor, always puts your interests first? Only 7% of the market said they felt that was the case. I'm sure that's not just down to Hong Kong cynicism. But there are some opportunities on the horizon. 55% of investment leaders expect globalization will offer new opportunities for investment professionals. Now, maybe in the era of more nationalism and some quite dangerous noises coming from the US, that's an optimistic fact. If you look at the Cfa Institute and use that as a barometer in terms of the number of people taking our exam, we are growing the candidate base at over 30% year on year, mostly because it is a global credential that's recognized as the number one in its sphere. But I think that global aspect of people wanting to do business with other people in a credible way around the world is certainly one of the drivers behind our own particular growth. And 49% of investment leaders expect new technology will offer new opportunities for investment professionals, and we'll say more about that later. So those maybe are the kind of industry disruptors that at a headline level we were seeing from the survey that we did. And we'll come back to those in just a second. But effectively, the positioning of this piece of thought leadership is that we are at something of a crossroads now in terms of industry. We've had 10 years since the global financial crisis, when we've been doing our best to re-establish trust from our investors, and to some extent, we have made some progress in that context, but there's an awful lot more to do. And we narrowed it down to, if you like, 4 different roads that we could choose or we could go down. And I'll just quickly skim through these for you right now. First of all, we could be misaligned. And by misaligned, I mean we put our interests first. We're less interested in our customers. We're certainly not thinking of our customers as we would think about our mother, as Andrew would extort us to do. We are untrusted. We're value unfocused, so we're not thinking about the additional value we give. Ethics is not really a big issue for us in that context. The investment industry doesn't have a license to operate. And there's a few nodding heads around the room right now, which suggests that you recognize that in your own markets as a position, certainly a perspective and a perception that we are having to move away from as quickly as possible. Or we could be, as we move down to the blue square there, an absent industry, where we actually have no reason for being, where capital markets are not functioning, where there's very limited investment opportunities, and where we ourselves have lost any kind of relevance to the local markets. I travel around Asia a lot, and I won't focus on any particular markets, but you see degrees of that across APAC and across the world, where frankly capital markets have almost no role at the moment to play. They're not encouraged from a political perspective. They don't have the talent to be able to manage the kind of challenges that will throw up. And that relevance to the future is something that we need to bear in mind. The dark green square, the bottom right there, an unnecessary industry, where effectively we've been taken out of the market, where we've allowed Fintech, artificial intelligence, robos, to take the place of our advisors, to take the place of the human aspect of what we're doing. But hopefully, as you can see, the arrow there moves to the professional industry, or what we call enlightened self-interest. Enlightened self-interest is where we become trusted, where we are trusted and focused on giving value to our customers, where we have ethics to the fore, where customers will choose who they want to do business with because they have great brand reputations, because they know that they put their customers first, because they know they treat their customers like their mothers. Now that's a long road for us to go down, but it's an aspiration that we have within the Cfa Institute, and I know you all share within the room. My own particular opinion is that we are entering the era of the loudest customer voice. The customer amplification will become noisier and noisier for all of us. And if we're not listening to that, if we're not aiming to be in that era of enlightened self-interest, then I think we're going to have massive challenges over the next few years. So listen to your customers and make sure that the value you perceive you're giving is the value they perceive they're getting as well. So this next slide is a little busy, so let me just talk you through it. We tried to come up with some scenarios that we wanted CEOs, CIOs, boards to be thinking about. And we did this by thinking about those disruptors I mentioned earlier and aligning them with megatrends that are happening not just in the finance world, but across the world in general. Things that you'll all recognize, like aging demographics, like tech-empowered individuals, people holding in their hand more computer power than countries used to own not so long ago. Tech-empowered organizations thinking very differently about how they use Fintech, how they use AI, how they're thinking about efficiency moving forward. Economic imbalances, the differences between the haves and the have-nots becoming greater and greater. Are we thinking about that in the way that we operate ourselves? I was in India 2 days ago. Now, most of you know that India has recently gone through a national card identification carrying process, which means suddenly 500 million people have access to the banking system who didn't have before. How on earth is India going to cope with that? 500 million. They can only do that through technology. Government footprint. How are governments involved in regulating not just finance, but across industry as a whole? We have a view at the Cfa Institute that you get the regulation you deserve, which maybe falls on good ears within this room. And we as an industry have behaved badly for a long time. Therefore, regulators will step in. That's not an ideal outcome. We know that. I've heard many questions today already spoken about self-regulation. But I think we as an industry have to step up. We have a slogan within Cfa Institute that says, let's measure up. Let's measure up, behave better, and therefore we'll be able to work in a much more open and transparent way with the regulators. And finally, resource management. What kind of people will industry require going forward? What are the skill sets that are going to be most useful in delivering this era of self-enlightenment as we move forward and we become a real professional body? So as I said, we blended those with the disruptors that I mentioned earlier on that came from our survey and came up with 4 scenarios that you can see on the right-hand side there. And I'll spend just a couple of minutes on each. They are not all-embracing. They are certainly not predictions. They can happen in tandem or not at all. But I think they are things that people should be thinking about as they're planning their own way forward. So first of all, Fintech. We're living with this, all of us, on a daily basis. I get a question more than anything else in the Institute is, do you think there's a future for humans? And I have to say yes, of course, because we are teaching human beings how to be better investment professionals. But we do. We believe that the future is a partnership between the efficiencies that technology can bring and the specific and unique aspects that talented, competent and well-trained individuals can bring. But new technologies will promote new business models, and they will be disruptive. It's happening already. Challengers will do better than incumbents, so new people are coming into our market and challenging us greatly. Although, interestingly enough, over the last couple of years, we've seen the big banks who've been trying to partner up with very small startups and come up with unique solutions for their own organizations. I was talking to a firm only yesterday, actually, who was saying they're seeing that dynamic change a little bit now because there's a worry of mega banks being over-dependent on organizations that may not exist forever. And so some of that R&D, some of that development is being brought back in-house again. Now imagine what that means in terms of corporate budgets, because one thing's for sure, if you design these things yourself, they become incredibly expensive. So watch this space in terms of that area of disruption. What are the implications for fintech disruption? Well, the passive trend will continue. We know that robo-advisors will grow, although I gave you my belief before that I think the trend will be a fused robo and human approach. Margins will be continually compressed. How are you going to manage that in terms of your own budgets and your own P&L? Active opportunities will be more limited. Regulatory monitoring will have to change. The birth of RegTech, which I'm sure we'll mention more than once today, is becoming more and more real. And how we are able to monitor ourselves as these business models change should be a conversation that investment management firms are having today. Parallel worlds maybe takes a little bit of explanation, this. We're moving into an era where people have great access to information across the world, wealthy or poor. So that ignorance, if you like, of where you stand in the world is disappearing. We're moving in a world where boundaries, geographic boundaries, are far less important. In fact, more important than geographical boundaries are the outreach of major corporations who span boundaries around the world. So maybe government influence will shrink as corporate influences start to grow. There'll be more involvement rather than less involvement in financial services. People on the whole will be better educated because education will be more accessible. Social media spreads like wildfire, and people are aware of what's happening around the world in a way that they were never before. What will that mean for us as organizations? Well, we have to be nimble. We have to appeal to a much broader client base than we have before. We have to manage our brand in a way that our reputation stands for what we want it to stand for in the market and isn't manipulated by social media itself. We have to be in touch with the next generation. I come from the world of wealth management, and our average client when I was working for Coutts in the UK was about 110 years old and male. That would be a very limited business model for us to be focused on for any length of time. So thinking about the next generation is something that I think we all have to get better at. You're likely to see more women being influential in this kind of world, as there is less discrimination about who's involved and talent comes to the fore. And we expect to see more innovation in this context as well. And it may not come from us, it may come from outside. So we have to be on our toes, listening to what's happening in the market. The third scenario is one that we've all been part of for the last few years, the lower for longer in terms of interest rates. Lower for longer in terms of interest rates being embedded for 5 to 10 years, and that's changing in some parts of the world slowly. But we know as an industry we've reacted to this pretty slowly as well, because that kind of environment puts pressure on our asset management fees and our margins again. We've seen asset owner insourcing. We've seen the slowing down of institutional funds and flows into pension funds. We know that it's called for courageous leadership, particularly when the focus has become on cost management. So more efficiency, a more in-depth look at middle and back offices, greater use of financial technology to try and achieve some of those efficiencies. We know that asset owners have wanted to renegotiate their terms with their beneficiaries. So a cozy relationship that's existed for many years is now being challenged simply because of the budgets involved. And we know that's likely to lead to new types of client relationships as well, and new types of client relationship skills. And I'll come back to that in just a second. The final scenario, and ending on a slight high note, is what we call purposeful capitalism. A scenario where we are inclusive, where we're in touch with what our customers want, where we build models around their needs as opposed to trying to get them to buy what we've manufactured without engaging with them. Operating in a way that thinks about sustainability, operating in a way that thinks about long-term investment and not short-term gains. I have the misfortune maybe of working for one of the banks that was the world's largest at one stage and is now one of the world's smallest, where many crimes were committed in the name of shareholder value. We need to be thinking of client value, not shareholder value. If you get client value right, shareholder value will come on very quickly. Diversity, culture, and the value proposition to employees will become equally important because people will be discerning about who they want to work with, just as customers will be choosing about where they want to do business and the importance of brand. Individuals and employees and talent of the future will also be making exactly the same decisions. Are you thinking about that when you think about your own cultures and values? Are you thinking that you're building an attractive employee proposition that will draw talent in from the market? What are the implications of this kind of world? We're likely to see asset owners collaborating. They have louder voices together than apart. We're already seeing that in some parts of the world. There'll be greater transparency, greater than ever before, and a greater call for you to be transparent. We've mentioned the war for talent. Culture will become a differentiator. Will I work for this organization? Do I want to do business with that organization? And you will be expected to be able to articulate that very explicitly to the marketplace. Stewardship will become a focus, which is, of course, part of why we're all here today. And as I said earlier on, long-term value creation will be the name of the game, not the short-term gains and sugar rushes that we've been living off for the last several decades. So as I start to wrap up, I mentioned before that skill sets will change. And one of the questions we asked within our survey is, what kind of skills will be required to be employed by and lead companies going forward into the future? And the feedback we had is that the model will need to change. An increasing need for soft skills, decreasing process-heavy roles. What do we mean by that? Well, I think about that through the CFA program itself. Now, for those of you who know CFA program, it's very heavily technical content aimed. So we treat people how to build a car. We don't necessarily teach them how to drive the car. And so we ourselves have been adding more and more, not just to the curriculum, but to member value about communication skills, relationship building, leadership, how you build relationships with new organizations, how you can have a view on things like culture and diversity. Leadership that is adaptive to change, because our environment is changing incredibly quickly. And we need people who are nimble and can move quickly with it. And an increased need, as I've already said, for diversity and interaction skills. These are the top 5 skill areas that we were advised by the survey that are of greatest importance going forward. First of all, being able to articulate a clear vision for your institution. The truth is, if you pick up any corporate brochure, they all say exactly the same thing. And there is a need to differentiate. There is a need to turn good values into a reality for your customers. Relationship building skills, I mentioned those earlier on. Specialized financial analysis skills, I promise you, we didn't put that in there because we're from the Cfa Institute. Instilling a culture of ethical decision making. We are focusing more and more now in terms of member value, in terms of ethics, having ethical discussions with regulators and with institutions about what it really means to put your customer first. The best definition I've heard of ethics, by the way, is how I behave when no one's watching. Are you really making sure that you're adhering to the values of your organization? And understanding corporate governance and regulatory requirements is going to be ever more important as we move forward. The scandal side of getting things wrong goes around the world in a nanosecond. And we know that happens today, and it will carry on happening. Making sure you know what the rules are and complying with them becomes ever more important. Finally, because there is a message there that says wrap up, so I will wrap up. I've mentioned diversity several times. We've done a number of pieces of work around diversity with State Street and Credit Suisse, where we've looked at the difference it makes to work in diverse teams, in this context, gender diverse teams, rather than the stale male and pale brigade that we've had in the past. And it makes a quantifiable difference. And so we are big proponents of this, not just because it's the right thing to do, but because it produces better outcomes for customers. And if you see this slide here, CFA Institute members clearly believe this, with well over half thinking that diversity produces not only better performance, but is a preferred environment. And in the retail and institutional space, that number is growing. So if diversity, whether it's gender diversity, cultural diversity, or any other version of difference. If you're not thinking about these things, I promise you your customers are. So they are looking for, are you the kind of organization we want to do business with? This has been something of a rush through what is a fairly weighty document. You have the essence of the slides. I think you have access to them through the portal that we set up for today. But if you want to see the more detailed report, it's on our website. We have a number of other thought leadership issues there. But I'm very happy to take any questions. Not today, because I have to run back to Hong Kong, but my details will be provided to you all, and it's been a great pleasure and a privilege to be able to speak here with you today. Thank you very much.